Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Today we're talking about industrial real estate, and we're going to talk about investment sales and cap rates. Before we do that, I'd like to welcome our new affiliate in Orlando. It's WRSO. We're on 810 AM there and 93.1 FM every Saturday at 9 a.m. So check us out in Orlando. We have Sim Doughtie here with King Industrial and Dayne Pryor, a partner with Panattoni. And Sim, we were talking earlier with CoStar with Renee about cap rates, and we talked about cap rates on maybe some of the non-institutional property. Maybe they're in secondary or tertiary markets, or are there B quality assets? And what are you seeing for cap rates and the trends there for those properties?
Well, the trends really are being pushed by the institutional people that are buying. They've lowered the cap rate so much on the Class A stuff. All the other investors have been driven to B and C. And so what you're seeing is they're buying these value-add driven properties that might have some vacancy to them, older buildings, lower ceiling heights and all that. And so a lot of times you might see those in an 8% cap rate range, but there's so many buyers that they're driving the cap rates down to like 7.2, 7.4%. So in that regard, I disagree with CoStar. I think that the cap rates are going down, not up.
Yeah, and I think that's an interesting point, because you're seeing cap rates go down and compress some more on those assets. And I think what CoStar may have been speaking of is the overall cap rates are going up because they're just seeing more of that smaller assets and more of that B quality. But so overall, all cap rates are really compressing, and you're seeing the same thing in the institutional quality assets, Dayne?
We are. I mean, the institutions have really driven cap rates low, and we're seeing it so much in industrial right now because a lot of these institutions already have their allocations of other product types, so they're under-allocated in industrial in a lot of cases, so they're having to ramp up their industrial acquisitions.
Right. So if you want to sell industrial building, call us. We can sell it right away, right? And what about some of the trends, Dayne? What are you seeing some of the trends related to debt and equity?
Well, debt is definitely coming back. We're seeing a lot more equity involved in the total capital stack of a project, but the leverage is rolling up to what we were seeing a few years ago was in the 55% range, and for a non-recourse construction loan. Now we're seeing in the 60, 65%, 70% range, a little bit higher for build-to-suits, but well-leased properties are very attractive to lenders, and the debt side is definitely coming back.
Well, it's interesting to hear you say that leverage and the loan-to-value ratios are getting really high. And when you say they're 55, 65%, because some investors, some listeners to the show may think that's not that high, but this is non-recourse money, right?
That's right.
That's a big deal. So if the market goes in the tank, you can walk away.
That's right. I think the lenders have really they're leaning more on the equity today than the name of the guarantor.
Yeah, well, it's probably smart on their part. And also, if you're an investor, it can be a very big deal because any company at some point could go toes up, right? And at some point that lease is going to expire, right? Yeah. And what about users buying SIM? Are you seeing with these low interest rates, and if the user's buying a vacant building, obviously the value is a lot lower, right, than a leased building. Are you seeing some users that are opting to acquire these assets?
A little bit of both, because lease rates are still low as well. Mm-hmm. So interest rates are low. It just depends on how much money they have, because if they don't have the equity, a lot of these people are still coming out of the recession. Mm-hmm. We had 4 or 5 down years. So if they don't have the equity, then they're not going to buy. I mean, that's just pretty simple.
Okay. Well, Sam, Dayne, thanks for joining us today. We appreciate you being with us.
Thanks, Michael.
If you'd like more information from these guys, we're going to have their websites on the show website at commercialrealestateshow.com. And check us out next week. We're going to talk about retail and the retail real estate market. The retail market's really been changing, as you've heard here with the industrial market. There's been some changes in retail with online, and the bricks and mortar business has been going through some changes, so check it out. Thanks for joining us today. Until next week, be sure that you always lead, learn, and laugh, and join us for the Commercial Real Estate Show.
The Commercial Real Estate Show is brought to you by Florida International University
and Bull Realty Commercial Brokerage, a great place to do business. For more information on these companies or to access additional podcasts, videos, or blogs, visit commercialrealestateshow.com.